Welcome to this week's market drama. We'll begin with the S&P 500, which was up 0.5%. NASDAQ was up 1.4% for the week. They're both roughly up 7.5% for the year. The outlier, though, was oil prices, which fell almost 7% for the week. Oil is still up 9% year to date. So what drove the weakness there? Well, we had a jobs report for April that was weaker than expected. And then we also saw some headlines showing some de-escalation in the Middle East when it comes to geopolitical tensions. Outside of that, though, what was the action this week? The action was on the job side. We had April's numbers, which showed a deceleration of job growth, right? Just to give you the numbers here, we had U.S. jobs totaling 175K in April. The expectation was for 240K jobs, so that's lower than expected. We also had the unemployment rate tick up from 3.8 to 3.9, even though the reasons that it went up are for the right ones, right? There was an increase in the labor force participation. Nonetheless, a disappointing labor number shows some weakness or less strength that we have seen in one of the most important data points when it comes to the U.S. economic data. On the more positive light, wage growth showed a deceleration year over year from 4.1% to 3.9%. Wage growth is a good proxy for inflation, right? So if wage growth continues to come down, that helps bring some of the pressures in the service sector of inflation to come down in future months. On the more positive light, outside of the jobs picture, was earnings. Earnings continue to deliver strong results. 8 out of 11 sectors are reporting year-over-year earnings growth, with 80% of companies in the S&P 500 already have reported. 77% of companies have beat their expectations, which is slightly above their 10-year average. This is coming out of data from FactSet. And the other big headline this week was the Federal Reserve had their meeting, and they held rates as expected. But more importantly, within their press release and within their press conference, they really had a more hawkish tone, right? A tone reminding people that the current inflationary data picture does not give them the confidence to lower interest rates soon, right? So that lowers the probability of them lowering interest rates this summer, maybe even this fall. And as always, they're going to be data dependent, right? So if inflation numbers start to come down, they might change their tune. But that definitely throws a little bit of cold water on the original idea in the last couple of months that the Fed was going to cut during the summer. That is it for this week. Next week, we have a Michigan Consumer Sentiment Survey. We have outstanding consumer credit data. And on the earnings picture, we have companies like Disney reporting that will give us a good sense of how the U.S. consumer is faring in this economy. That is it for this week. Stay tuned for next week.